Hello and welcome to Trading Factory. Today I will show you one of the most accurate trading strategies on my channel. This trading algorithm is based on 3 free TradingView indicators that can quickly double or treble your account size. I'll show you when to enter the trade, where to put stop losses, and how to set profit targets at the conclusion of the video. We'll add these indicators one by one and explain how they work. So to add the first, go to the Indicators menu at the top and search for KeyMod. There are many QE indicators out there, but the script you're searching for was created by Michael00. The key is a momentum-based indicator used to determine trends and sideways movement. It functions similarly to a smoother version of the famous Relative Strength Index indicator. The indicator, which consists of a white line, gray, blue, and red histograms, and a zero-level qualitative-quantitative estimation, can be used in 2 directions. First, to identify the trend. For example, if the white line is above the 50 level, the trend is ascending. If it is below, the trend is descending. Second, based on the colored histogram, when a new blue bar appears on the indicator, this is a buy indication. When a red bar appears on the indicator, this is a sell signal. This tool will be used as secondary confirmation, which means that the signals provided by the first confirmation indicator in our strategy will be verified by KeyMod, with the settings of this indicator remaining unchanged. For the next indicator, we'll need to add a tool called SSL Hybrid. Make sure you add the correct one. Before we get into the primary idea behind the script, let's make some changes to the settings. Disable everything except the baseline exit arrows and bar color in the style area, then go to the inputs and set the baseline to 150 and the type tool small, as well as the exit arrow length to 25. Once you've finished configuring the indicator, it should look like this. SSL Hybrid is a trend-following indicator that incorporates both moving averages and an exit signal, which will be used for entries as well as bar colors. Generally, we'll only be looking to buy when the price is higher than the baseline, and sell entries will only be available when the price is lower than the moving average. The arrows you see on the chart will serve as confetti. When the price is above the moving average and a buy arrow is printed below the candle, for example, and both the price bar, the baseline, and the KeyMod are blue, this is a verified long entry. If one of these conditions is not met at the time the arrow is displayed, the signal is invalid. For short entries, the reverse is true. If we look at some of these entries, we can see that not all of them have high accuracy. Take a look at these fake signals. The price would have immediately reversed and triggered the stop loss. So what's the problem, you might ask? Well, the problem is that our strategy lacks one fundamental piece, the volatility filter, without which we would not be able to eliminate all of the strategy's false signals. So, let's add it to the chart and see how effective it is. This script is called the Volatility Oscillator, and it was developed by VeriFid. Once installed, open its settings and uncheck some of the options. Now that the strategy is finished, let's go over the specific rules for purchase and sell trades. A buy signal is valid when the following criteria are met. First, a buy arrow appears on the chart. Second, the price bar is fully above the baseline. Both the baseline and the bar are blue. Third, the KeyMod bar is blue, and the white line is above the zero level. And fourth, the volatility white line must be within the range formed by the upper and lower bands. If the line breaks above the upper band at the time a buy signal is issued, do not enter the trade. This rule is critical to follow because it will increase the win ratio of this strategy to over 90%. As soon as the conditions are met, place a buy order at the close of the price bar. The stop loss should be slightly below the most recent swing and target at least 2 times the risk with this strategy. Adjust the stop loss to the break-even level as soon as the market hits a risk-reward ratio of 1:1. For a short entry, the following conditions must be met. First, a red arrow must be visible on the chart. Second, the price bar must be fully below the baseline. Both the baseline and the bar must be red. Third, the KeyMod bar must be red. And finally, the volatility white line must not break outside the bands. If it exceeds the upper or lower band, the short signal is invalid. If the criteria are met, place a sell order at the close of the price bar with the stop loss set above the most recent swing high, and follow the same money management principles as for long trades. Okay, so now that you know the trading setup, let's actually do our backtest on a 5-minute time frame and see if the outcomes are reasonable or not. I just finished the backtesting, and these results have surprised me. Our win rate is 70%, and the profits end up at 11%. I would also like to mention that these results will be different when trading live, so always try the strategy for yourself before using it. Guys, feel free to run back and forward testing on various markets and times to gauge how well it performs. If you want to see one of my other trading strategies I use when day trading, check this video right here, because this strategy works great on the every time frame you want. I'll see you guys next time.